This is a video in many ways I hoped you wouldn't have to make as you join me on a cool Auckland morning from home as we're in lockdown and New Zealand battles community transmission of COVID-19. I want to spend the next couple of minutes reflecting on what that means for New Zealand financial markets and in particular what it means longer term for us. First and foremost, it feels like the current outbreak is very well contained, very much fingers crossed on that one. To the extent that it is, New Zealand businesses are in much better shape today than they were when coronavirus first hit our shores. Many have raised additional share capital, many have put strategies and plans in place to manage their business through periods of lockdown like we're in right now. So we believe the effect on New Zealand share market will be relatively minor. We've got a good analogue for that. We can look across the Tasman at what's gone on in Victoria and see there that even the most exposed companies to the Victorian market, whilst selling off a little bit early on when lockdowns were announced, in fact in many cases are actually at higher share prices today than they were early on, so really good indication of what might happen here. That said, I think it would be naive to believe that firstly this is the only lockdown that we'll have in the coming weeks and months, and secondly what effect that might have longer term. So I just want to share three brief thoughts on how we're thinking about that. First and foremost, it is and always will continue to be a time to be very selective in what you invest. It's very clear that this affects some companies much more than others. So handpicking your portfolio, ensuring that the companies we're investing in are best positioned to manage in this environment, I think is a really important part of protecting and growing your wealth in this environment. Secondly, we do have an inbuilt stabiliser in our multi-asset portfolios like KiwiSaver, and that stabiliser is the Kiwi dollar. If New Zealand is unlucky enough for things to get a lot worse from here, it's very likely that the Kiwi dollar will fall in value. That makes the value of the international assets in those portfolios go up, and it really helps offset any losses that you might suffer in the Kiwi part of your portfolio. Fingers crossed it doesn't happen, but it's a very important protection that's built into your portfolios. Last but not least, and we've already seen this, the role of regulators and the government as COVID-19 plays out is really, really important. The number one thing right now on that is that the Reserve Bank has signalled very clearly that a negative official cash rate is quite likely, and in particular will be likely if COVID-19 gets worse in this country. What does that mean? Well, for borrowers, that means lower interest rates, lower borrowing costs, and lower costs to service their debt. So that's really important to protect borrowers. Unfortunately for savers, it has an effect as well, and that means that the interest rates we earn on our bank deposits and term deposits are likely to head lower. So that's something to think about as well. But a number of things there: active management, the Kiwi dollar as safety valve, and lower interest rates all give me real confidence that we can manage your money really effectively, even if things in New Zealand do get worse over the coming weeks and months. For now, keep safe, follow the rules, and I hope all goes well, and please do call us if you have any questions about your money over these difficult periods. Thank you.